going, everyone? Welcome to the Stock Market Morning Prep video for Wednesday, July 22nd. Well, we got a little bit of movement, again in the pre-market. Markets continue to kind of grind higher, but really was a standstill yesterday. Really not much movement in a lot of the stocks and, of course, the indexes. But we did have some exciting news that came out. Apple actually did not beat their earnings. They were 19 out of 22 they beat. And that's pretty good. The statistics are pretty good, but obviously the iWatch was a flop. Lack of iPad sales. They were kind of light and just not so great. Microsoft as well. GoPro, Yahoo, all mixed numbers. Some beat, but they still got clobbered. And why? When you have so many investors and market participants kind of late to the party, if you will, buying at these all-time highs, you have to realize that at one point in time, markets are going to take profits. And that's exactly what's happening. Yesterday, we had some really good information. TD Ameritrade CEO stated that most of their clients are fully invested. That is a terrible sign for the bulls. So be a contrarian here and say, be very careful with the market. I've been stating that for the last couple of days. We just came out of 3 weeks of seasonal strength from June 29th to July 17th. Like I mentioned, I said that the options expiration week generally bullish. Now we're coming into a little bit of a soft spot, so to speak. Nothing fantastic that we're going to be just kind of selling off, but where I feel we might take a little bit of profits for the next 2 to 3 weeks, maybe going into the first week of August. That will put an interim low where I think maybe the market just fully grind higher, right? Thin to win, if you ever heard of that expression, path of least resistance in a low volume environment is higher because most people buy stocks. So I think that'll push the indexes back up to at least the highs or try to challenge the highs or give it one more shot to make new highs. And then that's where I think you'll get into that correction phase sometime September, maybe October, where generally we come into a very bad time in the markets, one of the weakest times in the markets for the year. Okay, so just keep that in mind in the back burner right now. We still need some more market data, obviously, as we get closer to those dates. Now, in front of you, you see you have Apple here. This is after hours. And that, you know, guys, remember this. When I look at data and I look at price, I'm always looking at what happens after hours during earnings season. Now, Intel reported, and they rallied the market, right? And then Netflix reported that same day, and they rallied the market even higher. In the pre-market, they just kept on buying and buying and buying into the pre-market hours at 8 o'clock Eastern time where the markets would stop. Then you had Google, which into the stratosphere, up again. Now you have the biggest company in the world reported and missed, okay? That has to put a little credibility into this, okay? Now, we all know the euphoria of buying dips, which I am not a fan of when you have everybody on one side of the boat. So let's see what happens here. I would suspect that this puts in a meaningful top, at least a short term, where we might be able to sell low for hopefully a 2 or 3 day period, okay? And then we would reevaluate it there. You remember, guys, you know, Apple, the biggest company in the world, missed on their earnings, okay? And their sales were really soft, and that's not a good sign. So if Netflix and Google and Intel could push things higher, what goes to say Microsoft, which actually was okay, Yahoo missed, GoPro had good numbers, but they just had gotten sold off. Is something really to take note of, okay? We'll see what happens today. But if the market takes out yesterday after hours low, then you would suspect that we see some more downside. And I'm going to play today selling rallies, okay? That's where we're looking at for today. Let's go into the indexes. You're not going to see what happened after hours, but I just wanted to show you where we are here in Apple, all right? Even Spiders really kind of sold off a little bit. Now, this was before, this is all end-of-day data now at 4 o'clock, okay? So now we're probably down into here. We're going to need to fill this gap. And look, there's another gap here that needs to be filled as well, okay? So I would suspect if we have more further movement, I think that you'll see that 209, 210 area get filled in the Spiders, all right? Take a look at the Russell. Now, the Russell lower lows, lower highs. You can see this here, not good. We just broke the 20 and 50 yesterday and trading much lower in the pre-market now. All right, so when the Russell, which is a good gauge of risk, and you could say you would see the appetite of the investor really not now starting to falter here. Now we've been in this huge range for 7-8 months. Let's see if we break. If we break the 200-day moving average, and then I would suspect that you're going to see some decent downside pressure here. Okay. Transports. What can you say? They've just been down every day. Well, not every day, but as you can see, lower lows and lower highs here for quite some time. All of 2015. Not a good sign. Yesterday we had a little bit of reprieve to the upside, but still not a good sign here, guys. Okay. Diamonds. Gapped lower. Took out the, well, actually met the low from the previous day, and in the after hours is even lower now. That should, this index should make the first target of the 200-day moving average and then reevaluate it yet again, okay? Remember, guys, up 8 days in a row with no pause or pullback is just not something that I'm looking to entertain to buy at these levels. Give it some time. Remember, it will come back. Lastly is the Qs. Absolutely euphoric. It's just crazy that anybody would buy 2 standard deviations away, 180 points away from the 20-day moving average. Just insane. Pick your spots, be careful, and take your time looking for entries. It will come to you. Look at these gaps. All of these gaps eventually will need to be filled here, guys, okay? So my thought process is, remember, looking for some weakness for a few days. Let's see how the markets react to Apple's earnings. Now, remember, we went up straight up with Apple, with Google, Netflix, Intel. Let's see what happens if they absolutely do the opposite with the biggest company in the world miss on yesterday's report, okay? Again, looking to sell rallies here on any decent pop-up in the market for today. Have a great day. Good luck, and I will speak to you tomorrow. Take care, everybody.